Hello everyone, and happy weekend! Over the past 2 days, I've been analyzing the Bitcoin market. I've identified some trading opportunities, developed a trading strategy for Bitcoin, and made some general judgments about its future trend and time cycle. Today, I'm recording a longer video to share my thoughts with you for reference and learning purposes only. Based on the current Bitcoin trend, it's not yet the time to buy the bottom and go long, and the price is not yet reasonable enough. We may need to wait another 4 to 6 months. During this period, how should we build positions and plan position allocation? I will explain all of this clearly in the upcoming discussion. If you find this analysis helpful, don't forget to like, subscribe, hit the notification bell, and leave a comment below. It really helps the channel grow. First of all, when we perform chart analysis, traders around the world see the same chart for any given trading instrument. The technical analysis I'm using today may differ from other video analyses out there. Think of it as another way of observing the market. Since the total supply of Bitcoin is fixed at 21 million coins, its chart can be analyzed in a similar way to stocks when it comes to technical analysis. In the analysis that follows, I'll be applying several technical concepts, including divergence, momentum, degree, Chan theory, trend type, time frame, and Fibonacci retracement. Since Bitcoin's total supply is fixed, we can use momentum to measure the power comparison between bulls and bears, which is very meaningful. However, in other trading instruments, such as Forex or futures, the total supply can be expanded indefinitely within a certain period of time. This is why, when trading these instruments, stop-loss orders are often triggered. Stop hunting before the price reverses. Let's first look at the daily chart. On the chart, I've marked the calculation formula. The downside momentum is calculated as the magnitude of the decline divided by time. Starting from the high of 126,254, Bitcoin has mainly experienced 2 downside moves. Based on the downside momentum, it hasn't shown exhaustion yet. Let's calculate the momentum of these 2 declines. Segment A has a downside momentum of 1,888.11 USD or day, and segment B has a downside momentum of 2,237.12 USD or day. Both are marked on the chart. At the daily degree, Bitcoin is still dominated by bears. Only when it falls again, breaking below 59,898 to a new low, with weakening momentum and the appearance of divergence, can the daily degree decline come to an end. Of course, a breakout below doesn't mean an immediate trend reversal. We need to combine it with sub-degree trends for a comprehensive judgment. This is just the minimum requirement for a trend reversal. From the daily degree perspective, if we are bullish on Bitcoin's later price action, we cannot buy the bottom just yet. Now let's switch the chart time frame to the weekly chart. Since the decline from the high, it has also shown 2 downside moves, and the downside momentum hasn't significantly weakened. I won't calculate this momentum for you. You can do it yourselves. Using Chan theory's stroke trend analysis, starting from the high of 97,929.2, the decline is not yet complete in terms of time. At least one more candlestick is needed to form a new low, meaning the bottom pattern hasn't appeared yet. Based on the downside momentum on both the daily and weekly charts and the incomplete stroke trend, the future price will definitely break below 59,898.1. As for how low it will go, there is no clear judgment yet. From the low in November 2022 to the high in October 2025, the 0.236 Fibonacci retracement level of this upward move is 42,011. This is the basic extreme area and also my last defense price level. Of course, we first need to clarify the degree of several highs where sell points appeared. The highs in November 2021 and October 2025 both belong to the weekly degree trend divergence. The low in November 2022 was a weekly degree consolidation bottom divergence, where a buy point appeared. By the same theory, the decline from the October 2025 high of 126,254 also showed a divergence buy point. This is the safest opportunity for position building. The reason I mention the high sell point at 126,254 as belonging to the weekly degree is that it is not a monthly degree sell point. If you confuse the degrees, the magnitude and time of the adjustment will be completely different. The larger the degree, the stronger the momentum and the longer the time span. Similarly, for 2 weekly degree sell points, we can use multi-time frame confluence to judge. If you're unclear about the degree, the simplest way is to look at the charts. When both the daily and weekly charts show divergent segments at the sell points, that's confluence. As for some technical theoretical knowledge, I will gradually produce videos on them when I have time. On the monthly chart, the 3 upward segments are A, B, and C. Each upward momentum is stronger than the previous one, meaning no monthly degree sell point has appeared, and each low is higher than the previous low. As for whether this monthly low will be above 49,000, it cannot be confirmed yet. The monthly chart reveals a lot more information. Let's identify the time periods of each decline from monthly highs. 1. From December 2017 to December 2018, the downside time frame was 12 months. 2. From November 2021 to November 2022, the downside time frame was also 12 months. Based on this pattern, if we assume a 12-month decline starting from October 2025, the current high of 126,254 has already been falling for 6 months. That means, in terms of time frame, it still needs 6 more months. One thing to note here, due to a containment relationship between the October 2025 candlestick and the September candlestick, we need to process the downward containment. After processing the candlestick containment, the actual high is the August 2025 high of 124,487. If we calculate the time frame from the August high, it has already declined for 8 months, leaving 4 months until the full 12-month adjustment. Ultimately, the adjustment time is at least another 4 to 6 months for bottoming. Meanwhile, in the subsequent candlesticks, we need to see bottom structures and patterns, and the candlesticks should be small bullish and small bearish candles. During these next 4 to 6 months, excluding March's candlestick, this is your preparation period for building long positions. If you currently hold a short position, you can observe for another 4 to 6 months. After it breaks below the new low of 59,898, you can gradually close your positions. Similarly, close in batches, depending on the price action at that time and what kind of trend structure appears. We've analyzed the adjustment timeframes for each high, and the 2 upward timeframes were both 35 months. If we assume another 6 months of decline for adjustment, the next monthly cycle high should be around August 2029. This is just an approximate time. Whether this pattern will be broken in the future, I don't know. At this point, we can also identify 2 resistance trend lines. One early high was 19,663 in December 2017. Using this high as a starting point, we draw 2 trend lines. The first connects to the high in November 2021, and the second connects to the high in April 2021. These are the trend lines I've marked with black and green dashed lines. These 2 resistance trend lines are quite important. From December 2024 to October 2025, several intermediate highs were related to these 2 resistance trend lines. Now we can draw a future timeline, draw a vertical line 35 months from now, which will intersect with the 2 resistance trend lines. The highs around June 2029 would then be approximately 167,900 and 179,480. If you find the analysis helpful, remember to subscribe. I will continue to track Bitcoin in the future, and if there's anything special to note, I'll update the videos in a timely manner. I am a right-side trader. These technical analyses just serve as a guide for me. Trading decisions must be based on the current and future trend structures. That's all for the monthly chart analysis. Now let's take a look at the quarterly chart. Actually, on the quarterly chart, since Bitcoin's inception, there has never been a quarterly degree trend type. If you're watching the video and don't understand some of the technical theories at this point, you can ignore the technical details for now. Just listen to the process and results, and learn later when the theory tutorials come out. The lowest historical price I can see is $2 per coin. After that, the quarterly chart did not show any trend type, meaning no consolidation or trend appeared. Since Bitcoin began trading, its degree has gradually grown from minute, hourly, daily, weekly, to monthly. Currently, it has grown to a monthly degree consolidation trend type, like a baby growing up, still in its infancy. If we stretch the timeline to 30 to 60 years, the first decade or so is all a position building period. The difference lies in the size of capital and the timeframes for building positions. During this position building phase, volatility will be high. The main purpose is to achieve sufficient turnover over a large cycle through significant fluctuations and range-bound movement. In simpler terms, chip swapping, using shakeouts to facilitate full turnover, allowing ultra-large capital to accumulate enough chips. Unless Bitcoin or cryptocurrencies disappear altogether, with no development prospects, no necessity, and no justification for existence. During this position-building period, there will be coordination with many policies and timing to complete a closed capital loop. Currently, Bitcoin's total market cap is over $1 trillion. It's like a newborn, still in its infancy. It doesn't even have a single quarterly degree trend type. How can we talk about a historical top? It's far from that. Let's compare Bitcoin with US Treasury bonds. There's a ratio here, Bitcoin's total market cap divided by total US debt. The highest historical ratio was set at the October 2025 high, at 6.63%. Using this 6.63% ratio as a benchmark, by 2034, US Treasury debt, based on conservative estimates, will be at least between $50 trillion and $52 trillion. If this 6.63% ratio still holds, then Bitcoin's price should be around $160,000 per coin. According to a more pessimistic forecast from JP Morgan, if the US does not reduce the annual growth rate of its debt, it could reach $62.9 trillion by 2034, which would bring Bitcoin's price to $200,000 per coin. I tend to favor the $250,000 per coin price. Bitcoin is a risk-on asset, and each adjustment tends to be quite large. For a quarterly degree trend type to emerge, the quarterly degree high needs to appear around $250,000 to provide enough room for adjustment. The adjustment timeframe could be extended, possibly consolidating for nearly a decade, thereby constructing a quarterly degree trading pivot zone, after which the true main wave rally can unfold. Perhaps from 2034 onwards, it will consolidate for about 10 years. The monthly degree could last over a decade, while the quarterly degree trend could continue for decades or even centuries. From $2 to $250,000, drawing a Fibonacci retracement, the 2.618 level is around $660,000, and the 2.786 level is around $700,000. As for this $700,000 per coin, it's so far in the future that I don't know if I'll still be around. For now, we have to take it one step at a time. When buy points appear, build positions in batches. Today's video analysis of Bitcoin is coming to an end. I've basically covered what I wanted to say. If there are any omissions or different opinions, feel free to leave a comment. Some terms or information can be found in the chart annotations, which helps shorten the video time. Otherwise, the editing workload would be too heavy. I'm a trading enthusiast from China, and English translation is too troublesome. Many professional terms cannot be accurately translated by AI tools. Everyone, that's all for today's video sharing. See you next time.